Today on the Roxon Report, Bitcoin hit a new all-time high, soaring past $125,000 as the US dollar tumbles towards its worst year since 1973. The UK is set to lift its 4-year ban on crypto exchange-traded notes, or ETNs, giving retail investors regulated access to Bitcoin-linked products for the first time in years. And Walmart-backed fintech app OnePay is preparing to let its 1.5 million users buy, hold and trade Bitcoin and Ethereum directly in-app. All that, plus we have a new segment, The Great Bitcoin Debate, with Anton and Peter from Xapo Bank. And later we'll be speaking with Ari Redbord, Global Head of Policy at TRM Labs. That's all coming up right now on the Roxon Report. Welcome to today's episode of the Roxon Report. It's Monday, the 6th of October, 2025. I'm your host, Ione Butler. Right now, Bitcoin is at $123,929. And today, we have a new segment. We're going to hand over to our friends Anton and Peter from Xapo Bank, where they'll take on two sides of a topic within the Bitcoin space. How are you both? Welcome to the show and thanks for joining.
Oh, we are very excited to be here. We are looking forward to have, I believe, a very, very controversial debate because we have different opinions on this topic.
I am going to be listening, and I'll let you know who sways me the most after this debate. So, yes, Anton, I'll hand it over to you and take it away. Thank you.
All right. Hello, everyone, to the greatest Bitcoin debate, our brand new segment where we are going to discuss very controversial topics related to the best currency in the world, Bitcoin. So today I'm here with Piotr, and the topic it's called: should we invest part of our Bitcoin to real estate, or just keep everything in Bitcoin and do not get distracted? Now I'm going to share what I think, but before that. Piotr, have you ever thought about selling your Bitcoin and buying a real estate? Because wait, real estate, it's a great investment, no?
No, if anything, I would say sell your house and buy Bitcoin and accumulate more Bitcoin. And the reason why I'm saying this is because obviously, if you look from the purely investment perspective, purely financial performance perspective, there is no second best. There is only Bitcoin and then there is everything else. If you compare Bitcoin past performance with all the major asset classes like real estate, but also other like stocks and S&P 500, Bitcoin is always outperforming and historically been always outperforming all the other asset classes. Now, Bitcoin is a perfect digital scarcity. It's a perfect digital capital, which is a future of money for the 21st century. Real estate is really, for me, a very 20th century idea. It's something that boomers love to invest into for historical reasons. It's something that feels really tangible because you can touch it, you can live with it, you can go inside it. But it's not really going to compete on the same basis, on the same level as Bitcoin. If you compare across many different characteristics, so for example, you can start with comparing across scarcity, right? Bitcoin is perfectly scarce. We only will ever have 21 million, whereas in real estate, we continue building more real estate. We have urban sprawl, right? Cities are getting bigger. We are building more and more residential, real estate, houses, what have you. So we can always build more. So real estate is not really scarce compared to Bitcoin. And also, I would like to point out one fact. So if you look at the performance of the real estate for the last, let's say 5-10 years, real estate is generally been going up in price when denominated in US dollars. So it was going like 5, 10, maybe 15% when denominated in US dollars. However, if you compare this against this backdrop of Bitcoin, or if you start denominating the value of houses and real estate in Bitcoin, all of a sudden, the shocking perspective appears where you can see that house that 5 years ago was worth 100 BTC, now it's worth 12 or 10 or 8 BTC. And the trend is pretty clear, I think, by now, so that it's likely, obviously this is not a financial advice, but it's likely that in 5 years from now, you will be able to buy a house And I'm talking about the median price house, let's say US around 400K or so. You'll be able to buy a house with 1 Bitcoin or less. So you can see how much value is accruing to digital capital, meaning Bitcoin, versus their real estate, which is a really 20th century idea. But I understand that lots of people are basically still treating a real estate as the best idea for investment because, well, it worked perfectly well till now, and it's also something that we've been doing forever as people. Like, we're using the houses for shelter, but the problem I see also is that because the money is broken right now, we are using the fiat money that is losing a purchasing power each year. So people take their capital and they want to put that capital into something that will keep the value, right? And houses and real estate in general is a natural thing that most people will go to, right? So we end up in a situation where, because money is broken, people start using houses as a savings accounts, right? I can buy a next house and then the next house and then the next house because it will keep the value, right? I'll protect the value of my capital. And that's fair enough. But now with Bitcoin, this is simply not needed anymore, right? Because we have a perfected money, a digital money that is permissionless, borderless, can be transferred, around the globe in seconds. Not to mention all of these. If you compare this, for example, on liquidity front, it's hard to even compare this, right? The real estate versus Bitcoin. Bitcoin, where you can basically trade, buy and sell Bitcoin in seconds, anywhere, almost instantly, with little little slippage. Compare this to real estate, right? Selling real estate often takes months or can take years even if your real estate is not like a prime real estate that you have a buyer for. Not to mention all the taxes that are included in owning real estate. Not to mention the legal fees, the contracts that you need to sign, etc., etc. So this, in my personal opinion, this is something that was good enough before big advent of Bitcoin, but now once we have a perfected money in the form of Bitcoin that is really poised for a digital age in 21st century, in my humble opinion, the investment into real estate doesn't make sense anymore. But still, if you want to buy it for personal reasons, like you want your house for yourself because you want to live with that, by all means do it, right? I'm not talking about that use case. I'm talking about people who want to exchange the Bitcoin into real estate because they think that real estate is a better investment.
Oh, Piotr, there are plenty of valid points you made, but I would like to challenge some of them. You mentioned that the price of houses is sinking compared to Bitcoin, but let's make a step back and travel in time to 2017. Back then, the Bitcoin was almost $18,000. This was 8 years ago. Up until today, we are right now 7x. So the Bitcoin increased 7 times in value for a period of 8 years. I can point you a few different real estates in Dubai, in Miami, or a few more places around the world where the price of those real estates actually increased 10, 12 times. So you have real estates that are actually appreciating faster than the Bitcoin, and that's a very clear fact, which no one can deny. Yes, maybe on average for some average house in the middle of Europe in a small town, yes, Bitcoin is performing much better. But there are some also cases where Bitcoin is staying behind. And you mentioned about the burden of dealing with taxes and authorities, but I believe, in my opinion, real estate is the best way to move your wealth to the next generation. Because what if you keep your Bitcoin in a cold storage? What if you damage your cold storage, or if for some reason your hires they're not able to deal with with your cold wallet, and basically they made a mistake and lose the Bitcoin, they lose your generational wealth. And we know that statistically speaking, most Bitcoins have been lost because of mistakes with cold wallets or self-custody wallets, respectively, versus hacks on exchanges. So that's, I believe, the biggest risk of passing your wealth to the next generation, because again, like with real estate, everything is so clear. You just inherit the flat or the house, and that's it. You can either sell it, you can do whatever you want. But with Bitcoin, one mistake and it's over. Like it's completely gone. But let's go back to the point which we just discussed, and this is about having real estate as an investment to diversify your Bitcoin holdings. The point that I was actually alluding to is how confident everyone can be that their hires, like your family or your kids, how confident are you that they will be able to inherit your Bitcoin properly? Because statistically speaking, we know that more Bitcoin have been lost because of mistakes with cold wallets or mistake with self-custody wallets versus hacks on exchanges. And now, on a parallel, you can have real estate, and the real estate, it's super clear, very straightforward how your family can inherit it when you're gone. So that's one of the arguments which I believe it's worth to be considered when people are thinking about selling part of their Bitcoin and investing into real estate. Now, another crucial point here, which we should not underestimate, is about how easy is to borrow against your real estate. Everyone can go and take a mortgage against their flat, and then they can use the fiat to buy Bitcoin if you want. Like with Bitcoin, I don't know for many banks that are willing to use your Bitcoin as a collateral and giving you fiat, but that's one of the smartest way to diversify your Bitcoin with some real estate. Then you can always use this real estate to get some additional fiat, and if you want, you can recover your original Bitcoin holdings. And then, if Piotr, before going back to you, like the last crypto winter, Bitcoin went down from $69,000 to 16. That's a massive drawdown. Like imagine the mental burden if people are 100% invested into Bitcoin. Imagine the mental burden, like you wake up tomorrow or you wake up in 1 week from now and you're like 60, 70% down. Your total wealth is 60 or 70% down measured in USD. Can you handle this mental burden? Can you handle with the pressure? You won't have this with real estate. Like real estates are not going down that much, or at least they haven't went down for the past 15 years. They're probably the most stable investment on the market. I know you wanted to challenge also some of my statements, but then we got interrupted. So back to you.
Yeah, so on your point around volatility, I mean, the volatility is a price for that you're paying for innovation. It's basically, we haven't had in the history of humanity a digital asset like this. This is the first time this is the best digital asset. And it's basically because it's still early that obviously you will need to have some kind of volatility. But that is exactly why, when talking to our prospects, different customers, talking to other people, we are always, when talking about Bitcoin, we are always telling them that zoom out and think about the 4-year cycle and beyond that. Because historically, if you even bought at the top of the last cycle and then you rode it down all the way to 16K, as you said, if you held through that crypto winter or even accumulated more, at the end of the day, look at where the price is right now. So it's the time horizon and holding period that matters. And people, instead of timing the market, they should be thinking about spending time in the market. So if you have a time horizon that is more than 4 years, it is 5 years or 10 years, well, historically, you will always end up having more money than before because Bitcoin, if you zoom out, Bitcoin always rebounds even after the most extreme crash. And as time goes by, Bitcoin becomes a bigger and bigger asset, right? It grows, the market cap is growing. So the volatility is expected to decrease, and it's actually decreasing as time goes by. So it's very unlikely that we would now, of course, not impossible, but very unlikely that right now we would see the 80%, 90% drawdowns like in the very, very early days back in 2000, I don't know, 11 or something like that. So that volatility is decreasing, And that's something that you need to take into account because that's the asset class that is eating all those different capital categories, those asset classes, and the money is flowing from those asset classes into Bitcoin. And the more money is flowing into the Bitcoin ecosystem, the more stable it becomes, so the volatility is decreasing. Now, having said that, I would still expect some volatility to have it along the way, because even if the volatility is decreasing, you will still have this volatility. It's a crypto asset after all. But yeah, you need to keep in mind that there is this 4-year period and you just need to hold through it. That's what you should be looking for. You shouldn't be trying to trade in and out because you may get the timing not right, basically. Now, on your point around the primal real estate, you said about you basically enumerated the prime examples of the real estate. So, for example, you have the Miami beachfront property or best places in Dubai. How many people can even access those opportunities? It's not only that they cannot afford it, probably, but there are some other hurdles, right? Jurisdictions, taxes, legal stuff. So this is basically not for everyone, and it's excluding so many people that otherwise would also love to get access to those kinds of opportunities to preserve their wealth. Now, Bitcoin, on the other side, is not exclusive, it's actually inclusive, and this is the perfect capital for the 21st century for everyone. Because guess what? Now, if you're living in some place where you cannot access those top prime real estate on the Miami beachfront, well, guess what? You can buy Bitcoin and you can move your wealth into the Bitcoin. And you are not being discriminated against because it doesn't matter which language you speak. It doesn't matter what's the color of your skin. It doesn't matter where you're coming from. You can start accumulating and build your position. You can invest as little as $10, $100, whatever that is. You can DCA into it, which you cannot really DCA into real estate either, right? Now, there is also some final nail on the coffin for me, which is right now what we've seen in 21st century, the world is speeding up, as it seems like. We have AI, we have all these different developments, and it feels like we are moving faster, not slower in general. Everything is moving faster. It also feels that there is more geopolitical stability around the world. So you have, Russia, China, Ukraine, Iran. You have many flashpoints or potential flashpoints that could become very unstable, and there could be some wars or there could be some geopolitical events. And if you happen to have your real estate tied down there, it's going to be very problematic for you because real estate is basically immovable. You cannot move it from place to place. Whereas in Bitcoin, that problem totally does not exist because guess what? I can send my Bitcoin tomorrow to the wallet in Tokyo at 2 a.m. on Sunday morning without asking for anyone's permission and doing this within seconds, which is totally undoable with real estate. So I think having real estate as an asset class, as an investment, is only as good as the jurisdiction and the concrete location that real estate resides in. Because if there is some problem with jurisdiction or if the location is not as good as it should be, then that real estate is not going to be for sure good investment. Again, there are places like Dubai or Miami beachfront properties, but these are highly exclusive deals, and not everyone has easy access to those deals. So in that sense, I love that about Bitcoin, that this is really empowering billions of people around the world so that they can protect their wealth and not getting debased by holding fiat money that loses 8 to 10% a year, and instead move their energy and move their money into the system where, guess what? 1 Bitcoin equals 1 Bitcoin, and they preserve and protect their purchasing power. And then as time goes by, they start denominating things in BTC and they look at different asset classes, they look at other things that they could be buying, and they start pricing in Bitcoin. They are asking this question, how much Bitcoin is that worth? And then they see that everything is getting cheaper in terms of Bitcoin. So that's my closing thought here.
What you're saying, it's kind of contradictory because you mentioned the volatility is the price you're paying to Bitcoin in order to be able to interact with the superior form, the most superior form of money. But we're seeing that, and this is also what you said. We are seeing that the volatility of Bitcoin is going down, like in relation also to the potential price appreciation of Bitcoin. Like, see what's happening since the beginning of 2025. The Bitcoin is up 20 something percent, approximately 22 or 23%. Now, like real estates also are appreciating in value, and people are usually when like Bitcoin is involved into the debate, people are forgetting that real estates are not only appreciating in value. Yes, they're appreciating much lower than Bitcoin, but they're giving you also additional yield, which you can always collect by renting your property with short term, long term doesn't really matter. So once you have 6-7% annual rate combined with the appreciation of the property, which is approximately 9 to 10% every year, I'm speaking on average, then you're having like overall yield of 15-16% every year. Now, see, on the Bitcoin it's higher, but is it much higher? Since the beginning of 2025, it's 23%. On the real estate, we can argue that we are going to finish the year with 15%. Now, you have much higher risk with the price to go down by 50%, or even to go down by even like 20% in the next few months, and like you're still like behind the real estate. And yeah, my point is not to justify not owning, like to justify not selling Bitcoin, but I'm just trying to explain that having Bitcoin, which is giving you enough flexibility to sell portion of your Bitcoin in order to invest into real estate, then use a smart leverage to potentially recover your original Bitcoin investment. It can be much more like smarter, I would say, strategy than just keeping your Bitcoin. The Bitcoin is not going to do anything for you. It's not going to generate you yield. And then you just have to wait for the price to appreciate, which I agree, it will happen. But again, like, why not be smart, diversify, protect yourself, decrease the mental burden when the price start decreasing, which we know it will happen. So that's the point I wanted to make. It's like having real estate is not that horrible idea. It's going to be horrible if you sell all of your Bitcoin and then enter the real estate. Like, having zero Bitcoin is the biggest risk anyone can take. We're on the same page here, but once you have enough Bitcoin and you can sell part of your Bitcoin for real estate, you can exchange it. Then is this bad idea? I don't think so. All right, we are almost near the end of the greatest Bitcoin debate. Piotr, final thoughts. Did I manage to convince you to sell some Bitcoin for real estate?
No, I would definitely wouldn't do it. If anything, I would just borrow against my Bitcoin using cutting edge products that are popping out right now. You can just take your Bitcoin, go to some company, and they will give you cash against this Bitcoin. And this Bitcoin will keep appreciating in the meanwhile. And then next year, you will just repay this loan and they will give you your Bitcoin back. So you'll keep the upside, whereas you will get access to your liquidity. And then you can finance your home if you like it. So I'm not convinced that this is a great investment, but I still think that if you want shelter, if you want place to live, if that's your dream house, by all means, go for it. But it's hard to even compare performance of real estate versus Bitcoin, because Bitcoin is perfected capital.
Yeah, totally. By the way, the fact that you can borrow against your Bitcoin, it was not existing on the market. At least it's not a very popular option. But yes, if like everyone can borrow against their Bitcoin, then we have slightly different reality, and this conversation can take or could take a different route. Thanks, everyone. I hope you enjoyed the first segment of the greatest Bitcoin debate. So back to Ioni.
Thank you both for that. I think I have to side with Piotr on this one. I think, but I can see both of your points. I think it's very, very dependent on the individual or the family and what their goals and aspirations are. And you're right to say with this, the addition of being able to borrow against your Bitcoin, then it just is like a whole new discussion. You know, it kind of opens up another kind of level. But I think for me personally, not being very fixed in one place and not sure where I want to be, I think Bitcoin is the move. But thank you for that. That was really fun. We look forward to hearing from you guys next week, perhaps.
Absolutely. Thanks for having us.
Absolutely.
Pleasure. Take care, guys. Thank you. Bye-bye. We're going to take a quick commercial break, and when we come back, we'll dive into some of the Bitcoin news stories for the day. We'll be right back.
Security matters. Xapo Bank, the only way to bank your Bitcoin. Apply now at xapobank.com.